Hey, what's happening, folks? So I'm getting a lot of questions right now as it relates to, is the market going to cool or is the market going to crash? Everybody's in the real estate space, and I want you to keep one thing in mind. Look, if you're in retail real estate, in all likelihood, things are going to slow down for you. Why? Well, interest rates, right, is going to begin to have a significant impact on buyer demand. It's not going to do one thing as it relates to the supply shortages, which are really driving up the prices, right? A lack of supply is driving up all the price increases and all the things that we see as investors that make this market actually super beneficial to us. And so I would tell you, if you're in retail, I doubt you're not going to see any kind of crash, but you are going to see a little bit of a slowdown, a cool down, if you will, and probably a few less buyers coming to the market than what we've experienced over the last 18 months or so. If you're a real estate investor, you shouldn't see anything one way or the other impacting your business, right? There shouldn't be a cool down or there shouldn't be a crash. Why do I say that? Well, again, supply continues to be highly restricted, and we as investors do not operate in the retail side of the business, right? We are dealing with buying distressed assets or assets that we can for sure buy at a discount. Largely, we're buying these assets, again, at a discounted price, and we're buying them to either one, do the value add, and that is by improving the property, driving up the rents, whatever the case may be, or getting the rents up to market rents, I should say. Or two, we're buying that at a discount and quickly flipping these properties from a wholesale. We do not operate in retail. And so the interest rates should have zero impact on you if you're a real estate investor at all. It should have nothing to do with you. The people that you're selling houses to, largely if you're a wholesaler, they're investors, right? They're going to continue to want to buy at a discount. So as the market maybe cools down and slides down, your pricing will slide accordingly. But I do not think anything should impact your marketing whatsoever. You continue to market for discounted properties. You continue to go after distressed situations. You continue to try to buy at a discount where you can ultimately flip it to another investor and or do the value add. It should have zero impact. Now, I can tell you very clearly how it will have impact is that if you start to play small, if you are not marketing heavily, if you are not continuing to get marketing into your, get, whether that is direct mail, texting, any kind of mass media, television, radio, brand, billboards, bus ads, all that brand building, mass advertising. If you're not doing that, if you're not out there doing SMS texting, as I said, direct mail, cold calling, if you're not doing these things and trying to continue to penetrate deeper into the market, then for sure, what you will do, and the reason you're doing it is because you're playing small, and you're playing small because you're looking at the headlines instead of looking at the data. I've said this many, many months. This is a supply-driven run-up in the market. The prices have increased dramatically because we have static demand, maybe even a little bit of inflated demand because interest rates were so low. But we've had pretty consistent demand, but all of a sudden supply has restricted and contracted so sharply and continues to do that where people aren't moving. We are not addressing, we don't have the ability to address the shortage in single family homes. We're continuing to build 400, 500, 600,000 fewer homes, single family homes, than we should be building as a society and have done that for the last 10 years. So here we are with a 4.5 to 5 million home shortage in the residential market and just worse in the multifamily market. And there is no logical way to address that in any kind of reasonable way here, right? What do I mean by that? It means that even if we wanted to go build an additional 1 million, 2 million, 3 million houses this year, we couldn't do it, right? We do not have we have not addressed the supply chain issues, the skilled labor issues, right? The opportunity to actually go and address the market hasn't even and can't be largely addressed. And so that phenomenon that we are in, where we have this shortage of available properties, not only will it continue, in all likelihood, it will just get worse. And so as that continues to happen, you don't need to be necessarily, as an investor, looking at that and saying, oh my God, is now the right time to buy or not buy? The reality of it is it's always the right time to buy if you are buying at a discount with good fundamentals based off of cash flow, knowing where you can do value adds. These are fundamentals. As long as you stay in your lane, you're going to be just fine. If you go and speculate, which means you are no longer investing, you are speculating, then you are probably destined sooner rather than later to get hurt by doing that. Because as I said, I doubt very, very seriously, there is nothing to indicate that this market is going to crash in any way, shape, or form. Will it cool down? Certainly at the retail level. Well, that might happen, and it might happen in certain pockets of the country more so than others. But largely at a macro level, this market isn't going anywhere. So keep your head in the game. Keep marketing hard. Hope that helps.